Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Wednesday, September the 8th, the year's 2021. Let's talk trading. These videos are for educational purposes only. Your results may differ from mine. Okay, psychological trading. What's psychological mean? It means mental or emotional, rather than say logical or rational. So, why would we want to do emotional trading? Why would we want to do something that, say, maybe is based on feelings rather than on data? Well, what we call, or what I call psychological trades, when we look at levels where other people are going to have emotions. So, we're not necessarily going to trade off of our emotions, but the emotions of others. So to do that, what I'm going to do is I'm going to adjust the wall mall or the sweet spot gold lines. Normally we do 100 and we do 10, but we're going to change this to 25. And we're going to take off the show buy sell because we're not doing wall mall trades here. So what happens is we have the lines every 25 pips. So at the double O, 25, the 50, 75, and then the next double O, and so on. People react at the double O, actually with the 5 digits, you call it the triple O, but we're thinking in terms of pips, so it's the double O. And then they also have a reaction at 50. So this is the most important. 50 is the second. 75, 25, pretty much the same. And normally, when we look at it, we look at the H1 time frame. But if you look at it on the daily, and I've got the auto adjust on, so let me turn that off. Auto adjust false. And so we switch over to daily. And I think you can see just how obvious it is. And we're not doing H1, so we can turn this one off. I'm doing all these indicators in real time during the movie, during the video of the movie, so you can see how to do it. So looking at the daily, it should be obvious if we trade with the D1 candle color at the first line encountered that it would be profitable most of the time. Of course, is it going to work every time? No, I have to say that because just the way things are. So I have to tell you, it's not going to work every time. But you should know that if you don't. But since I just told you, now you do, right? And if we look at yesterday, it encountered the 50 line, and it had a high of 56. So there was 6 pips possible. Then it encountered the 25 line. It encountered the 50 line as a green candle, 25 line as a red candle, and you see what happened. Here, it encountered the 50 line as a red candle. Here, it encountered the 25 line as a red candle, and we had a low of 17, so there's about maybe 7-8 pips. Then it encountered the 50 line as a green candle, and you can see. Very simple trading, very simple. These are the types of trades where, let's say you have a job or something, and you can't sit in front of the screen all day. Well, maybe before you head into work, you plot these trades. You can put them in as limit orders and pending sell stop or buy stop, depending on which way, where price is relative to what you want to do. Actually, I think you would be putting in buy stop and sell stop, because for example here you'd have a buy stop here and a sell stop there. And I think once again it really should be obvious to the viewer if you look at these lines and you look what happens at the first encounter based on the D1 candle color. So we're not reacting to the lines, but we know others are. We have no emotional reaction to the line. We're just trading at that psychological level. And I believe it should be simple. Of course, as always, you have to have your risk management in place. But I have to tell people that because they say, well, you didn't tell me to. So I'm telling you to. So remember, always have your risk management in place each and every trade, and never lose more than you're willing to lose on any one single trade. Now, with the brain management and psychological trade, they kind of go hand in hand, because you don't want to trade out of emotion or fear or regret. You don't want to do any of the things that cause you to think about losing out or missing out, have any regrets of missing out or getting out or being stupid, because you don't want to experience any pain. And we know pain comes from your reaction to the market, not the market itself. So let's just take a quick look here at the monthly. We turned red at 53, which was the monthly open. All gaps have filled. You can see for the week we pretty much covered last week's candle. We're in the lower wick zone of the previous week. In fact, it looks like we actually punched through the low and prices reversed. We still have last week's pivot. Looks like that needs to be covered. You see we actually touched the or actually penetrated the opening range for the month here. We're 97 pips above the yearly open, now 94. That was quick. And you can see we're back inside that inside bar for the previous week. Only 61 pip range for the day. 3 pairs over 100. This is definitely a return bar. Big candle. We are definitely in green rat territory here. So notice I have the H1. Usually we have what, M15, M5. So now you see we have a green M15, green M1. And we have taken out the monthly pivot. We haven't hit the daily pivot. So we've got a missed pivot here. We took out that missed pivot a couple days ago. So look for 3802 to be taken out maybe tomorrow or the next day. Just have to wait and see. So far this year, we've got a missed pivot today and a missed pivot from back in June 17. And that missed pivot was right here. And while we're looking, the weekly, 2 missed pivots from last month, this year, monthly, no missed pivots. Wick zone, in and out at the top, in and out at the bottom. Actually, no. This is all the bottom. There's the top. So this is all lower wick zone, but the top of the lower wick zone, bottom, lower wick zone. And you can see here on our scalp trade, it looks like, let's see, it was at, well, since this is real time, I'm not 100% sure where this was at this point in time, but it looks like there was possibly, well, I can do it like this. M1 low was here. And there was an opportunity to make 4 or 5 pips. Now we've got a nice 3-2-1. If this turns around and breaks, that's a trigger to go long. Back to where we started. Now, if you have any questions on this, feel free to ask. But this psychological trade, using the daily, you could set up alerts. Maybe your platform could send you messages, a text or something. Hey, there's an opportunity here. And you can take advantage. Huge range, biggest range of the day actually, 39 pips. 40. Notice we're in the rat zone here. Minus 76 ATR. In fact, bringing up the ATR chart, it's telling you, wait, don't be an idiot, because it wants you to get into the ATR. It's giving you, I believe this is the one, it's giving you the line for ATR trades. So it's just telling you to wait. So since this is a red candle and we only have about 4 minutes left in the hour, just sit on your hands. If that next hour goes green, look to go long. Remember to have your stop losses in place. And remember, trading is sometimes like hand grenades. See, we got near that 25 psychological level that we were just talking about. 25.8. We shift this over to an H1. You can see it. For some strange reason, chart wants to give me a hard time, but this is a return bar. Look for price to get to the open of this bar, which was 62 on a reversal. So that's going to wrap it up. Now, I'm going to ask you to do me a favor. Please hit the like button. Oh, and I like to welcome the couple of new traders I saw picked up on my Reddit thread. I appreciate your support, appreciate all the good karma you're sending me. So remember, when you sit down at your trading platform, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.